Assalamualaikum warahmatullahi wabarakatuh, and we are from Group 7. For this presentation, we will be discussing Usaha Kekal Enterprise, which we selected as our client for this accounting information system project. Usaha Kekal Enterprise is a small family-owned business established in 2004 and located in Universiti Kebangsaan Malaysia. The company operates in the souvenir industry, selling various merchandises such as shirts, jackets, caps, and souvenirs related to UKM. For this project, we selected revenue cycle because it is one of the most important business processes that directly generates income for the company. The revenue cycle allows us to examine and understand the flow of sales revenue from customer order placement through the collection of payment. The purpose of analyzing revenue cycle: first, ensure accurate financial record. Accounting information system records all sales transactions, invoices, account receivable, and cash receipts accurately and systematically. Number 2, improve operational efficiency. The use of accounting information system in the revenue cycle helps automate order processing, billing, and payment collection. It reduces manual errors and increasing efficiency. Lastly, strengthen internal controls. The revenue cycle incorporates controls such as segregation of duties, transaction authorization, and proper documentation, which help minimize the risk of fraud and errors. Overall, the revenue cycle analysis provides insights into how Usaha Kekal Enterprise manages its sales revenue and identifies opportunities for future process improvements. This flowchart illustrates the current revenue cycle process of the company. Throughout this process, several departments work together to ensure that the customer orders are fulfilled accurately and efficiently. The first step is tagging customers' order. At this stage, the sales department receives the customer's request and records important information such as products ordered, the quantity, and the customer's details. It is essential to record accurately because any mistakes at this stage may affect the rest of the process. After the order has been received, the company checks whether the requested products are available in inventory. This step helps ensure that there is sufficient stock to meet the customer's demand. If the products are available, the process can continue smoothly. Next, once the stock has been checked, the company submits an order to the supplier. A sales order is sent to inform the supplier about the products and quantities required. This ensures that the supplier clearly understands the company's order and can prepare the requested items. After receiving the sales order, the supplier picks the requested products from their inventory and packs them carefully. During this stage, the supplier prepares a packing slip, which contains detail of the items included in the shipment. The packing slip helps verify that the correct products have been prepared before they are handed over. Next, once the supplier has completed the packaging process, the goods are ready for collection. The customer then picks up the ordered products from the warehouse. Before realizing the goods, the company ensures that the correct items are provided to the customer to avoid any delivery errors. After the customer has collected the goods, the finance department prepares an invoice. The invoice contains details such as amount payable, payment terms, and customer information. At the same time, the transaction is recorded under account receivable, which allows company to monitor payments that are still outstanding. And the last step is cash collection. The customer makes payment based on the invoice that was issued. And once the payment has been received, the company records the transaction and issues a receipt as proof of payment. This confirms that the customer has fulfilled their payment obligation.
Moving on to our internal analysis, we have identified 3 critical operational and financial weaknesses that currently expose the business to significant risk. The first weakness is lack of segregations of duty. Currently, business fail to separate custody of the online banking portal from the recording of accounting entries. This means staff members who have access to manage banking transactions are the same individual are responsible for logging those transactions in accounting system. By failing to separate these rules, it can drastically increase the risk of undetected financial frauds and internal theft of cash. The next one is inefficient inventory and supplier master data integrations. Right now, the business inventory system do not seamlessly connect with supplier master data. This creates a severe disconnect when trying to restock or manage supply chain efficiently. Because of this problem, business lack of real-time integrations, threats of stockout, and lost sales. Therefore, business frequently fails to fulfill customer demand because lack in supplier data and timely reordering mechanisms. Ultimately, this issue directly leads to customer dissatisfactions and fail to meet customer demands. The third weakness is posting error in account receivable. Business currently relies heavily on manual data entry. This manual process frequently results in unmatched invoices between shipping documents. When data entry incorrectly, it creates highly inaccurate financial statements and business decisions making. Now that we have highlighted these vulnerabilities, let's look at the next slide to discuss our proposed improvements and how we plan to indicate this risk.
Next, I will be explaining the proposed improvements that can enhance the company's revenue cycle. The first improvement is flexible order fulfillment options. The company should provide customers with multiple fulfillment options based on their convenience. Customer can choose between home delivery, self-pickup, or self-pickup at the company or warehouse. By offering this option, the company can improve customer satisfaction, reduce delivery delays, and provide greater flexibility to meet different customer needs. And the second improvement is inventory safeguarding. The company should strengthen inventory security by providing a dedicated storage area with restricted access, where only authorized staff are allowed to enter. This helps prevent theft, loss, or unauthorized handling of inventory. In addition, the company should implement an automatic inventory system. The system can update stock levels in real time, reduce human errors, and improve inventory accuracy. As a result, employees can make faster and more reliable decisions when processing customer orders. The final improvement is the collection deadline policy. The company should establish a clear collection deadline for customers who choose self-pickup. The seller will send a notification informing customers that their order is ready to collect and specify the deadline for pickup. If the customer does not collect the order within the given time frame, the company can cancel the order or charge a storage fee, depending on the company's policy. This helps prevent inventory from remaining in storage for too long and allows warehouse space to be used more efficiently. In conclusion, these three improvements, flexible order fulfillment options, inventory safeguarding, and collection deadline policy, can improve operational efficiency, strengthen inventory control, enhance customer satisfaction, and support a more effective revenue cycle. Next, we will move on to the flowchart. This flowchart illustrates our proposed improvements for the revenue cycle by integrating suppliers into the order fulfillment process. The objective is to improve efficiency, reduce inventory costs, and ensure customers receive their orders on time. The process begins with take order, where the company receives a customer's order through its sales channel. Next, the system will check stock availability. At this stage, the inventory is checked automatically to determine whether the requested items are available. This helps avoid accepting orders that cannot be fulfilled immediately. If the stock is unavailable or insufficient, the company will submit order to supplier. Instead of storing excessive inventory, the purchase order is sent directly to the supplier. This approach reduces warehousing costs and improves inventory management. After receiving the purchase order, the supplier picks and packs the goods according to the customer's order. The supplier prepares the products for shipment and ensures they meet the required specifications. Once the goods are ready, the supplier proceeds with delivery goods to customer. A bill of lading is generated as proof that the goods have been shipped. This document also helps track the shipment and confirms the transfer of goods. After the customers receive the goods, the company performs billing and accounts receivable. An invoice is issued to the customer and the amount due is recorded in the accounts receivable system. The next step is cash collection, where the company receives payment from the customer. A receipt is then issued as a proof of payment. Finally, the process reaches the end of the revenue cycle where the transaction is completely successful. In conclusion, this improved flow helps streamline the order fulfillment process by checking stock availability before placing supplier orders, reducing unnecessary inventory holding, speeding up deliveries, and improving cash collection. As a result, the company can operate more efficiently while providing better service to customers.
Next, we will go to expected impact of the proposed revenue cycle improvement for Usaha Kekal Enterprise. First, operational efficiency. The transition to a proactive delivery model using GPS tracking and mobile proof of delivery, which POD application eliminate customer pickup delay and significantly accelerates warehouse stock turnover. Second, data accuracy. By implementing the Bill of Lading, which BOL, as a mandatory second gate verification within the ERP system, the company can achieve a 100% error-free packaging rate and eliminate the financial burden of process return. Third, internal control. Requiring signed BOL and maintaining an unalterable digital audit trail through the POD application effective transfer legal liability to carrier and protect sensitive company data from both internal and external fraud. And lastly, for business performance, automating the generation of invoice the moment a digital delivery is confirmed, remove billing dispute, and allow the enterprise to significantly speed up its cash collection cycle and improve daily liquidity.